Hello everyone and welcome back to Explain the Charts, your go-to channel for actionable crypto insights and in-depth market analysis. Today, September 12th, 2025, we're diving deep into Ethereum, symbol ETHUSD, providing a comprehensive analysis of its current state and future prospects. We'll start by examining the most impactful news and current events shaping the Ethereum ecosystem and the broader crypto market. Notably, we've seen significant institutional engagement, with Allied Gaming and Entertainment recently announcing a strategic investment in both Bitcoin and Ethereum, signaling growing corporate confidence in digital assets. Further bolstering this institutional narrative are reports of Ether ETF inflows hitting a remarkable $1.66 billion in December, a trend that continues to attract major financial players into the space. Adding to the fundamental strength, Ether treasury company Bitmain has expanded its investment by another $200 million, bringing their substantial ETH stockpile to over $9 billion. This level of sustained capital commitment from large entities underscores a powerful bullish sentiment for Ethereum's long-term value and utility. On a broader scale, the total on-chain value of real-world assets integrated into the crypto space has nearly doubled since the start of the year, a development largely facilitated by Ethereum's robust infrastructure. This points to increasing practical application and adoption of the Ethereum network, moving beyond speculative trading to tangible financial innovation. Macroeconomic factors are also playing a role. Recent softer-than-expected U.S. inflation numbers have ignited hopes for an earlier Federal Reserve rate cut. Such a monetary policy shift typically boosts risk on assets, and we've historically seen this translate into positive momentum for Bitcoin and altcoins like Ethereum. Lastly, while some analysts are predicting an Ethereum whale sell-off could trigger an ETH price crash under $2,800, others are setting the stage for a potential $6,800 target in Q4, highlighting the diverse perspectives and inherent volatility in the market. With that news context, let's now transition to the daily chart for ETHUSD, observing the price action from April 2024 right up to today. Looking at the broader picture, we initially see a period of consolidation around the $2,900 to $3,100 range in early May 2024, before a significant upward surge. A prominent bullish candle on May 20th, 2024, marked an impressive nearly 20% gain, propelling ETH from approximately $3,071 to $3,661, a strong indicator of renewed buying interest. This initial rally could be correlated with early whispers or positive developments surrounding institutional interest, setting the tone for future growth. However, the summer months of 2024, from June through October, presented a challenging period for Ethereum, characterized by a gradual downtrend and sideways movement. During this time, ETH steadily depreciated from its highs, eventually finding a floor around the $2,400 level, testing investor resolve. A powerful turnaround commenced in November 2024, marking a clear bullish reversal that saw the price climb confidently from approximately $2,400 to the $3,300 range. This resurgence gained further traction into December 2024, pushing ETH past the $4,000 psychological barrier, a move that aligns perfectly with the reported $1.66 billion in Ether ETF inflows during that month. This demonstrated how quickly positive news and institutional capital can translate into significant price movements. The enthusiasm was short-lived, as early 2025 brought another notable correction. From its December highs, Ethereum retraced significantly, falling from around $3,600 in January down to lows near $1,800 by mid-March. This sharp decline during Q1 2025 certainly validates the analysts' concerns about a potential whale sell-off, as the price briefly dipped below the $2,800 threshold. However, Ethereum quickly found its footing, embarking on a robust recovery through April and May 2025, demonstrating its underlying strength and demand. Continuing our examination of the daily chart, let's identify the critical support and resistance levels that will define Ethereum's trajectory. The $4,800 to $4,900 price range stands out as a formidable overhead resistance zone. We've observed multiple attempts in August 2025 to break above this area, each met with significant selling pressure, confirming its strength as a supply barrier. This level will be absolutely crucial for any sustained bullish breakout towards the highly anticipated $5,000 psychological mark. Immediately below the current price, we identify strong support in the $4,200 to $4,250 range. This zone has proven its resilience during recent pullbacks in early September and previously served as a notable resistance point in early August, demonstrating a flip in market dynamic. Further down, a key midterm support level rests around $3,600 to $3,700. This area represented a consolidation zone in June-July 2025 before the most recent leg up and could act as a bounce-off point if we see a deeper correction. On the downside, the $2,800 to $3,000 region continues to hold immense significance as a long-term psychological and technical support. This is the level that was mentioned in news reports as a potential crash trigger, and historically, market participants have shown strong interest in defending or accumulating around this price point. A decisive break below this would signal a profound shift in market sentiment and a longer-term bearish outlook. Now, let's zoom in even further to the 1-hour chart to analyze the more immediate price action and recent volatility, specifically targeting August 24, 2025. If we look at the candles between 1700 hours Universal Time Coordinated and 1800 hours Universal Time Coordinated on August 24th, we observe a very aggressive bullish push. Ethereum surged from the lower $4,800s, hitting a high of nearly $4,958, indicating strong buying interest attempting to break new ground. However, this rapid ascent was almost immediately met with overwhelming selling pressure in the subsequent hour. The candle from 1900 hours Universal Time Coordinated shows a sharp rejection, with the price plummeting back to around $4,817, forming a bearish engulfing pattern. This specific price action powerfully reinforces the news narrative that Ethereum's price is currently pinned below $5,000. The high trading volume accompanying this rejection candle further emphasizes the conviction of sellers at these elevated levels. This event highlights the critical importance of the $4,900 to $5,000 range as a major psychological and technical hurdle for ETHUSD in the short term. Traders watching this time frame would have clearly seen the strong upper wick and immediate reversal, signaling caution for any long positions taken near the highs. To gain even finer detail into today's trading landscape, let's pivot to the 15-minute chart, covering the most recent week leading up to September 12, 2025. This time frame reveals a period of tight consolidation and somewhat indecisive trading following the larger rejection seen on the hourly chart. Throughout the past week, Ethereum has largely been fluctuating within a narrower band, roughly between $4,300 and $4,450. We can pinpoint smaller, yet significant, bullish impulses, such as the rapid increase on September 8th, where ETH surged from approximately $4,345 to $4,370 within a single 15-minute candle. Such rapid, albeit contained, movements underscore persistent underlying buying interest even within a consolidating market. As of now, ETHUSD is trading around $4,457, indicating some renewed upward pressure after testing lower bounds earlier this week. The modest volume during this consolidation suggests that neither bulls nor bears are currently dominating with overwhelming force. For day traders, these tight ranges offer opportunities for scalp trades, but the lack of a clear directional bias on this timeframe calls for careful risk management. A breakout from this $4,300 to $4,450 range on significant volume would provide the next clear short-term directional signal. Synthesizing our news and chart analysis, let's consider the primary reasons for bullish and bearish outlooks on Ethereum. The bullish arguments are robust and multifaceted, starting with the undeniable institutional adoption, which is bringing fresh capital and legitimacy to the ecosystem. The consistent Ether ETF inflows signal a growing appetite from traditional finance, positioning ETH as a favored asset in diversified portfolios. Furthermore, Ethereum's evolving role as a yield engine for treasury strategies, leveraging its staking capabilities and DeFi ecosystem, presents a compelling value proposition beyond mere price appreciation. Positive regulatory developments, like Japan's crypto tax overhaul, set a precedent for more favorable environments globally, reducing uncertainty for investors. If this momentum continues, the ambitious analyst prediction of a $6,800 target in Q4 becomes increasingly plausible, especially if a broader crypto market uptrend takes hold. On the other hand, the bearish sentiment is primarily driven by the persistent technical resistance Ethereum faces around the $4,800 to $5,000 psychological barrier, where price has repeatedly been rejected. The historical price volatility, particularly the sharp correction experienced in early 2025, serves as a cautionary tale of potential downside risks. While not an immediate threat, the possibility of a significant whale sell-off always looms, potentially triggered by macroeconomic shifts or a loss of confidence. For short-term traders, the key lies in observing decisive breaks of immediate support and resistance. A strong move above $4,500 could indicate continuation, while a dip below $4,300 might signal further downward pressure. Understanding these dual forces is crucial for forming a balanced trading strategy and identifying optimal entry or exit points. To summarize our comprehensive analysis for ETHUSD, let's recap the most important price levels and what to look for next. The immediate and formidable overhead resistance is firmly established in the $4,800 to $4,900 zone, with the psychologically significant $5,000 mark looming just beyond. For support, watch the current trading area around $4,400, followed by a stronger foundation at $4,200 to $4,250, which has demonstrated resilience in recent pullbacks. A deeper, but critically important, long-term support level resides near $2,800 to $3,000, which, if broken, would signal a significant change in trend. Now, for some unbiased predictions on what Ethereum might do next. There's a 65% likelihood that Ethereum will retest the $4,800 to $4,900 resistance zone within the next few weeks. This prediction is heavily reinforced by sustained institutional interest, continued positive news flow regarding ETFs, and a general improvement in the broader crypto market sentiment. A decisive break and a sustained daily close above $4,900 would be a strong bullish signal, opening the path towards the $5,000 target and potentially the ambitious Q4 prediction of $6,800. However, this move would require significant, sustained buying volume to overcome the established selling pressure at these highs. Conversely, there's a 35% chance of a pullback towards the $4,200 to $4,250 support zone if buying pressure weakens, or if unexpected negative macroeconomic data emerges. A convincing breach below the $4,200 level, especially on high volume, could signal a deeper correction, potentially revisiting the $3,700 area or even the $2,800 to $3,000 critical floor. Traders should meticulously monitor volume metrics alongside price movements. Strong buying volume on rallies confirms genuine upward momentum, whereas diminishing volume or increasing selling volume on dips would suggest underlying weakness. Keep a close watch on upcoming Federal Reserve announcements and any new developments in crypto regulatory frameworks, as these external factors can significantly impact price action. Thank you for joining Explain the Charts for this detailed look at ETHUSD. We hope this analysis helps you navigate the markets more effectively.